What are your thoughts on the current state of the market?
Ooh, it's a fun environment. I think it's definitely separated the big boys from the little boys in this current market environment. I think Feds are going to raise interest rates a little more, and then they're going to taper down. We got a very large presidential election coming up in about a year and a half. So, politics do have something to play with in the market. And so I think they're going to watch that very closely. People are still spending a lot of money, so it's a very interesting times. The more they raise interest rates, I think the more it benefits for multifamily because people need a place to live. It's a necessity. It's not going anywhere at all. And it's a business that I truly love. And I'm actually in the process of starting another business, and that business is a necessity. And I was thinking, I love businesses that are necessities, no matter the type of the downturn you're in. If it's a necessity, people need it for their health, for to live. It's always going to be around.
Yeah, and, food, shelter, shelter being real estate, that it's not going away anytime soon.
It is not. No, very much so. We all need water. We need shelter. And it's very important to make sure that we can, utilize that and live with it. And we're going to have to because we need it.
Yeah, and there's definitely something to say, something to be said for interest rates. They've gone up so high over the last 18, 24 months. It's shocked a lot of investors that didn't do proper due diligence. But beyond that, it's created another problem for affordable housing, which is going to force a lot of homeowners to stay put. Some of those, actually, quite a lot of homeowners are staying put just because they're not letting go of their 3% mortgage.
They are.
There's that. A lot of those folks may never ever sell their house.
They may
Then
not. It depends.
it all depends. But they're going to be a lot more reluctant to sell their house. Then there's first time home buyers, which, I mean, if they were pricing mortgages 2 years ago and they're pricing it now, like it's a problem for them. And then you got the price of homes. Something's got to give. They got to make more money, or they got to really start adjusting their expectations on the quality of home, which plays into multifamily. So if they're not buying, then they're going to be staying somewhere. That's either because they own a home, they're just not moving, or they're going to continue leasing. So that's the stimulus, and really the only way I personally, and let me know your thoughts, I see out of that rut, other than interest rates falling, is new construction, which has been, from a single family standpoint, very slow nationally. Like
I will tell you, here in Charlotte, single family companies like D.R. Horton, that are very large companies, are building these single family homes and townhomes here in Charlotte with aluminum instead of lumber, because of the price of lumber, I guess, is more expensive than aluminum.
Wow. Like aluminum beams or something?
Yeah, all aluminum beams and everything.
Kind of like the retail
like
strip centers, and yeah.
Like a retail and office space. They're using that now, because according to the rep here in Charlotte, it's a lot cheaper than lumber right now at the moment, which is shocking.
Can you imagine trying to hang a picture? Instead of the stud, you hit the aluminum beam.
I know. You need a metal detector or something, to try to find it.
Huh. Hey, that could be a new hot product. So instead of those, what do they call them? The magic hook things you put on the wall, you just have one that's like a super magnet or something.
There you go. You can put magnets now. That'd be neat.
Yeah.
But yeah, times are changing. Things are different. I think also, the price of labor is astronomically high. So, it's different.
So that's one side, but the other side of the high interest rates is it very much impacts valuations of all housing. Single family is a little different, because it has actual owner occupant utility. Multifamilies doesn't. It's a business. It's purely a leasing business. So investors buying in are buying on yield, and higher the debt costs, it impacts their yield. So
For sure.
it definitely impacts valuation, which over the past 12, 18 months, that bid ask prices, it's been wide. I don't know that it's really narrowing, maybe a little bit. How do you see that shaking out, at least over the next, say, like 12 months or so? You think we're going to still see a wide gap, or is it going to start closing up?
Being an agent, and I'm sure everyone can relate to this. If you're a true listing agent, you know that when you go into a listing appointment and you talk to a seller and the seller thinks their home's worth 600, but you got to break the news to them and say, hey, the market, your neighborhood, here are the comps, here are what your other properties, have going for them. It's at 525. And you're going to get those sellers, no, you're ridiculous, get out of my house, blah 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 blah. I'm listing with that agent who told me 600. Then it sits on the market for 90 days. Then they come back to you and say, why is this not selling? And you said, well, Mr. Seller, I told you it's not selling because there's a huge price gap. And they may say, well, you're still wrong. I've had that happen all the time. I've had some come back and say, we want to list with you. And I'm like, well, that 525 is no longer 525, it's 480.
Yeah.
That's just the market. And, I'm a messenger. I'm telling you what buyers are doing right now. That is happening in the multifamily space. We are trying to buy assets and there's a far gap still. Sellers don't want to sell. However, up until 2025, there's about 1.7 trillion, I believe a little more, or excuse me, 1.25 trillion, because I looked it up the other day, of deals or of loans that are come due. And so you're going to have to sell. You probably can't refinance. If you do, you're going to have to bring more money down to refinance, but you're going to have to sell. So what happens in that scenario? What do you do in that scenario? You're going to have to either talk to your investors and say, hey, you're going to take a little loss, or hey, we can break even, or you may be able to profit a little money off of it.
Yeah.
But that is going to be opportunity if you can stay strong during this market cycle. You have to stay strong. You have to underwrite correctly when it comes to these deals.
Yeah, the debt is one thing that keeps commercial real estate moving, because 30-year fixed, very common in single family, not quite as common in commercial finance. They're typically fixed for a period of time, shorter period, 2, 3, 4, 5, 7 years, or whatever, 10 years. And then after that, they're floating. If they're not floating day one. But even if they are floating, there's rate caps and those expire and you got to buy new ones, and they're astronomical now. So it's a lot more complex with commercial, but that can force a hand. And I think there's a record amount of bridge loans this year that are coming due. And a lot of those folks, if you bought it over the past couple of years, you're probably not in the best position to refi to meet, debt coverage ratios that agency debt will require.
Agreed. It's all different. And the lovely part about commercial debt is you can negotiate. I mean, you have fixed, you have a floating rate. You also have some buy down options of the rate, which we're doing right now at the moment. So there's so many multiple options that you have. You just have to know how to negotiate.